What if I told you that most investors don't actually own the gold and silver that they think they own when they buy an ETF? Investing in gold and silver can be that of buying a seat in a private jet versus owning a ticket in a commercial airline, both of which might take us to the same destination. But the way in which the journey is going to be set and the terms and conditions can be radically different. Let's attempt to unpack the real world of gold and silver ETF and see for ourselves what we are getting to when we actually buy an ETF. You open your trading app one morning and decide to invest in, say, Midas Gold ETF. With one click, you feel confident. You have just bought gold, right? Well, not exactly. What you actually own is a claim on gold, not a portion or the entire bar itself. Somewhere in a secure vault, Midas's custodian holds physical gold bars, and for each they issue a warehouse receipt, the digital document that says that such and such gold really exists. But here is where it gets interesting. Those receipts seldom stay idle. Midas has complete authority to use them as collateral to raise short-term loans, while also use hedge positions or maybe settle trades. The same 1 kg of gold in the vault may now be quietly supporting your Midas ETF unit, a bank's loan exposure, and maybe even a hedge fund's futures position. Nothing is illegal. This is the way financial plumbing works. But it means the system has layered leverage built on top of the same bar of gold. Well, as long as everyone trusts Midas and the market stays calm, there is absolutely no problem. Now, let us say, one fine day, there is a need for several investors to request a physical delivery of gold. The system could realize that there are far more Midas claims than metal. You actually don't buy a gold bar. What you bought is a ticket that says there's one waiting for you somewhere, hopefully in the vault. Do you usually read the terms and conditions in a ETF voucher? Many people don't even see the ETF prospectus. 99 out of 100, the gold ETF prospectus or the silver ETF prospectus, no matter whatever be the commercial name and brand, they would decline to settle the ETF physically. Even if you were to accumulate, say, 1 kg of gold equivalent ETF units. This is something that one should ponder. Midas made gold easy to buy, but also easy to multiply on paper. A custodian is simply a professional caretaker for someone else's assets. In the world of gold and silver ETF, the custodian is the vault company or bank that physically stores the metal on behalf of the fund. Think of it like this. If you keep your jewelry in a bank locker, you are the owner, but the bank is a custodian. The bank provides the locker facility, security, and insurance, but it doesn't own your jewelry. Similarly, when you buy a gold ETF like Midas, the ETF company doesn't personally hold your gold in their office. They hire a custodian, usually a big international bank, for instance HSBC, JP Morgan, or ICBC Standard Bank, to store those gold bars in secure vaults. The custodian then issues a receipt confirming the metal exists and is held under their watch. That receipt becomes the base document for the ETF. So, the custodian is not the owner, they are the trusted middleman who guards the gold and provides proof that that is there. Coming back to the airline analogy, imagine Midas as an airline. When Midas operates like a chartered flight, then what happens is every seat is accounted for. You book your seat, Midas keeps it reserved just for you, and the aircraft won't take off until that exact number of passengers are on board. The flight is fully backed, no empty promises, no overbooking. In this model, Midas holds the gold in vaults, the warehouse receipts stay locked, and no one reuses them for anything else. Your claim is clean: one seat, one owner, one bar of gold. But when Midas behaves like a commercial airline, the story changes entirely. To optimize costs and earn more, Midas may pledge its warehouse receipts, the documents providing ownership of gold, to raise extra funds. Let's say there is a hypothetical company called Octopus Capital, a large financial institution. Octopus takes those receipts as collateral, raises loans, and uses that money for entirely different purposes. Maybe bond trading, derivatives, or even real estate. Hence, the same bar of gold in Midas's vault now quietly supports multiple financial journeys. Your ETF unit, Midas's liquidity, Octopus's loans. So everything works fine until turbulence hits. When too many passengers suddenly want their seat back, the system realizes there are more tickets than seats. And that's when the effect of leverage silently creeps in. This is not fraud, but through layered promises built on the same piece of metal. When gold becomes collateral, it stops being your seat. It becomes someone else's ticket. Now let us look at the typical brands that are available in India and US and understand where the gold stands with regards to the structure of how the gold is being held.
In the next sequence, let's try and understand and unpack what can happen so that the entire financial system can freeze because of gold and silver ETFs. Stay tuned.